This weather report sponsored by Party City. Nobody has more holiday for less.
If you wanted to follow the strategy of a single stock investor, there are 50 billion reasons to choose Warren Buffett.
Give or take. His former daughter-in-law, Mary Buffett, is an expert on his stock-picking method. Her latest book in the Oracle of Omaha is called The Warren Buffett Stock Portfolio, and she joins us this morning. Mary, nice to have you here.
Good morning. Pleasure.
What's nice is, first of all, for anybody, it's a quick read. You're going to give us a little synopsis, though, this morning. But everything seems very understandable and very much about common sense. I would say one takeaway for me is patience. How much of Warren Buffett's success has to do with patience?
A lot of it. I mean, I always say, everybody can invest like Warren Buffett if they stick to the principles of his investing philosophy and if they have the discipline. But most people don't. And I always wonder why, because it's really not rocket science, and that's why we write simple books.
But we like this instant gratification.
A huge part of it is the discipline, though, right? But also we should mention that, Warren's ideal time frame for holding a stock is forever. Most people can't do that.
Well, it is and it isn't. I mean, in 1969, for instance, the Nifty 50, which were the 50 of the U.S. biggest growth companies, people thought if you invested in them and held them, you'd be safe forever. But what he saw is when those stocks were being extremely overpriced and knew that their earnings could never catch up to their current price, he sold them. And he sat on that cash and waited patiently for the 1973 market crash, and then he stepped in and bought at bargain prices.
Which is one of those famous sayings, Warren Buffett always says, when everyone else is scared, I'm buying. And when everyone else is buying, I'm scared.
When people are fearful, be greedy, and be greedy when others are fearful. Right.
That's what we should try to do?
That's what you try and do. I mean, he's a contrarian. He buys when people are selling, and he sells when people are buying.
And he doesn't. We spend so much time looking at the Dow Jones Industrial Average and watching the daily moves on Wall Street. That isn't something that he uses as a barometer. In fact, is it true he just kind of ignores all of that?
Yeah. I think one of the great things that allows him to be patient and disciplined is the fact that he's removed himself from the banter of Wall Street, and he focuses on looking for companies, which we should all do, kind of like knowing the girl that you want to date in high school, but she's dating somebody else. So you wait.
So you start making a
plan.
So you wait till she breaks up. You lie and wait,
and then you're there to pick her up when she falls down.
It's like know the companies that are fabulous,
And and he has three basic models for companies. The first one being
a durable competitive advantage, which is really so simple. It's durable. It's a company that makes things now that are probably going to be around in 10 years. An example is
razors,
Coke, Gillette. I mean, Coke and macaroni and cheese. I really doubt they're going to change much in 10 years from now. And then part of the durable competitive advantage is understanding what the company does. I mean, Warren bought railroads and low-cost providers like Costco and railroads. Not going to have to morph and reinvent themselves. Get a chance to take those profits and put it back into the company. And the third is the low-cost provider, the consumer monopoly. You might say Johnson & Johnson, Band-Aid, is a registered name. And when you use the word for the name of an adhesive product, you say, get me a Band-Aid. It might be bought at Walgreens brand or Kleenex, it might be a tissue that you bought at Costco, but you'll say, give me a Kleenex. Boy, that's when you own a piece of the consumer's mind.
It's a good piece to own.
Mary Buffett, thank you very much for coming in this morning. Appreciate the advice.
Oh, my goodness. It's been my pleasure.
Nice to have you with us.
Yeah.
Just ahead, why you can't afford to ignore the fine print when it comes to flood insurance.
We're going to go to one city in California where insurers are telling flood victims we don't have to pay. You're watching The Early Show right here on CBS.